Hello, everyone. Welcome back to Navalier Market Buzz, episode 40. I'm Crystal Navalier, and I'm joined again this week with my father, Louis Navalier. We have a very special guest, Ed Elfenbein, who is the editor of Crossing Wall Street and the manager of Advisors Share Focus Equity ETF, CWS. Thank you so much, Ed, for being here.
Thanks for having me.
So Ed is one of my former editors for Growth Investor, actually in the early days when we were beating the market by 6-1. That was back when the tail end of the S&P was doing better than the top end, so it was much easier to beat the markets back then. And Ed was kind of like a lucky rabbit's foot for me, and we used to joke that anytime Ed commented on a stock, it went up. So he's now established himself as a major money manager with over $200 million in his ETF, and it's an honor to have you here, Ed.
Thank you. It's an honor for me to be here.
So, Ed, I know that you live in Washington, D.C. Can you share what the mood is like right now?
Well, first I have to say your father always has this view that I'm deep on the inside of what's going on in Washington. So I can't share any high-level meetings that I get invited to, but I can tell you that in my neighborhood there definitely has been. I think the real estate market has been a little rocked by a lot of the cuts, the Doge forced cuts coming in D.C. So it has had an impact in my little neighborhood, which is Adams Morgan, which is kind of like a small town in the center of Washington, D.C. So that's been the effect I've seen so far. Outside of that, I haven't been invited to any fancy Georgetown dinner parties, but rest assured, I will let you know if that comes.
So, Ed, what do you think about our new Treasury Secretary, Scott Bessent?
Interesting guy, very smart guy. I think he's kind of a stabilizing force in the White House. As we know, the president can be a bit bombastic and he makes these proclamations. And so often we see the president saying something, very dramatic, and then Scott Bessent coming and saying, well, actually, and we saw on CNBC a number of times, the president speaks, the market goes down, and then Bessent comes out and say, well, no, he didn't mean any of that, and the market goes back up. Interesting guy. He's, one thing I just find interesting is he's the highest ranked civil servant in American history who's openly gay. I don't think anybody cares about that anymore, but that's just sort of an interesting take. Also, his background is he's from George Soros. He worked for Soros for many years, sort of the bugaboo of many on the conservatives in the United States. So he has an interesting background. Also, I think he quite obviously, in my opinion, I don't think he cares about deficits at all. He's not a deficit hawk. But I think he's very worried about inflation and is very sensitive to kind of these bread and butter issues that a lot of individual Americans, families face. He's an interesting guy, and I think he's probably one of the more powerful Treasury secretaries we've had in recent years.
Yeah, I like to say in Scott We Trust. I think people are scared of him because he made $1 billion betting that the Bank of England would have to
Yep.
big, and
they made $1 billion in one day.
Yeah, for Soros when he was young, and I think he's doing a better job than Yellen did. Yellen had a hell of a time managing the long end of the yield curve.
Mm-hmm.
I think the reason we were permanently inverted for so long is she just couldn't manage it, and Scott seems to be doing a better job. We have a more normal yield curve, and anyway, I find it to be very reassuring, So,
but I think it's interesting you say that because Yellen is an academic where Bessent is a practitioner, and in this role, I generally would side, all things being equal, I'd go with the practitioner because they understand how markets react, they understand how investors think, and that's the kind of thing I think works better for a Treasury Secretary.
Ed, I'm very frustrated because the Fed is trying to fight this inflation bogeyman that hasn't materialized, and we have plenty of evidence of deflation. And of course, we just had a tame PCE report. And I don't know. What do you think's going on with the Fed? I mean,
I hate to say I don't think you're going to get your way, because I don't think we're going to see a Fed rate cut. At the earliest, it's going to be after Labor Day, and even that I think we'll probably at most see another rate cut for this year, and all of that's been put off. But I think um, I think you have a sound point about this. We're really not seeing the damage coming from inflation. Today's PEC, were we going to see it from all of these, from the tariffs? Well, we really haven't seen it yet. And today's PCE report, I'm talking on Friday, really hasn't shown the evidence yet. That's at the core level or at the headline level.
Well, Ed, my real thesis was that interest rates would be collapsing in Europe because France, Germany are in a recession, and it's pretty severe in Germany right now. In fact, the economic ministers in Brussels are begging for subsidy for big businesses because they just can't compete. And Britain's also in a recession. Half the people in Britain can't even pay their power bill without subsidies.
Mm-hmm.
So it's I'm just waiting for this global interest rate collapse to unfold, and we know, of course, the ECB will be cutting rates for the 8th time, and but China's rates are lower than Japan now, and
Mm-hmm.
had a currency devaluation, and so that was the main reason I thought rates would collapse. Just hasn't happened yet. So
Yeah, I mean, you still may be right, but just remember, before the great financial crisis, things can always drag on longer than you think. Housing was clearly overpriced in 2005, 2006, but it held on for a long time.
So, Ed, Howard Lutnick claims that tariffs can help lower income taxes. Do you think that that's true?
No, I think that's absolutely delusional. Interesting guy. He's the Commerce Secretary, a big fan of tariffs. And I mean, if it were 1913, maybe he would have a point. But when we're talking about tariffs, we're talking about billions. When we're talking about the income taxes, we're talking about in the trillions, in the many trillions. Even now, I would say probably about half of the revenue of the United States comes from individual income taxes. So, if we have about 5 trillion a year ago, about 2.5 trillion comes from people, paying their income taxes. But we're talking about at a 10% level, that's of tariffs. We're talking about 30 billion, so billion a month. It doesn't even come close to making up what we owe within taxes, and that's on top of that. We're not even balancing the budget. So Howard Lutnick, entertaining guy, but his math is way off.
Ed, I don't know if you saw his latest frustration. Howard's complaining that when they do the reconciliation on the tax bill, they don't count the tariff revenue.
Right.
That has him very frustrated.
Mm-hmm, mm-hmm.
So, Ed, do you think that the big, beautiful tax reform bill will pass the Senate before the 4th of July holiday?
Yeah, interesting question. I would say yes. I think it will. So let me take a step back. Is that it? Miracle of miracles, it got through the House. You really have to hand it to the Speaker of the House, getting all of his ducks lined up. I believe the vote was 215 to 214. Not a lot of room to spare, and there's a lot of people who are not exactly thrilled with what the House passed. So it goes off to the Senate now. The big force on this is Senator Ron Johnson, who has made it clear he is not a fan. He thinks that they're not attacking the deficit at all, and he's right about that. The question is how many people agree with him, and also there'll be a point that they're going against the president of their own party. So it's one thing to disagree, but to actually sort of go on record and block a bill, it would be a very dramatic move. I don't think they quite have the numbers just yet. At some point, I could see some sort of battle between the GOP on Capitol Hill and the Trump White House becoming larger. A good point is that Ron Johnson, the senator from Wisconsin, he was elected in 2010, which means he's a Tea Party guy. And he's probably one of the last who really believes the Tea Party stuff. So much of the rest of the that ideology, particularly the Treasury Secretary, they're not into the deficit reduction. That's not what gets them. But Ron Johnson certainly does. Ultimately, I think the Senate will come together and pass something so they can go on vacation with an actual bill. And then it goes back to the House, and it starts all over again with the reconciliation.
So Ed, let's talk about stocks. You have a four-star ETF according to Morningstar. You're a specialist in the mid-cap blend category. So how do you find your stocks?
I hunt and peck. I'm an old-fashioned stock picker. I look through lots and lots of different companies, and I try to find a company with a strong market position, a company with sound finances, a company that dominates its industry. I love buying monopolies. In fact, the only thing better than a monopoly is a near monopoly because it doesn't get attention from the government. So I guess I could say I learned a lot of this from you. So I'm passing those lessons on. And we're going to have, as you know, lots of ETFs close up shop every year, but we're as strong as ever. We're near an all-time high, and for shares outstanding and AUM. So in September it'll be 9 years. So in ETF years, that's a long time.
That's awesome. And if it ever slows, you just rename it the Monopoly ETF.
Exactly.
Although I don't know if the ETF charter lets you put everything in NVIDIA. But I like to say we've gone from a magnificent 7 to a magnificent 1, you know. So.
It is.
Well, congratulations on that, Ed. I was wondering if you could share how people can buy your ETF with the smallest possible bid-ask spread.
Yeah, that's a really good question, and it's very important because it highlights what makes ETFs so great, why they make such a good investment vehicle. So let me back up for a second. A lot of times when my ETF is around 200 million, a lot of times people don't like a smaller ETF because they think it's not liquid. So if they buy shares, they'll be sort of trapped in. And that is a misunderstanding of how ETFs work, because ETFs can essentially print shares automatically to meet demand or delete shares to meet selling demand. That's what makes ETFs really cool and why they work so well. So now there is a liquidity issue on the underlying stocks. That's not an issue for us because they're pretty liquid stocks. So it's a misunderstanding that a lot of people have about how ETFs work. Now, what we say is if you're looking to buy CWS, we always recommend using limit orders. And that's, I think, the best way to be disciplined, the best way to get a good fill. Remember that Warren Buffett can get a bad fill. That's just how the traders are. So what we recommend is layering some trades, usually just below the market value that you'll see in the last trade for CWS. Sometimes you'll get lucky, sometimes you won't. But if you're patient and you're disciplined and you put in, let's say, CWS is at $69.23 per share. Well, put in a buy order for 200 at 69.06 or something like that. You may get filled, but you may not. But time is on your side. So it's a high quality ETF. You don't have to run in and lock in at an exact price, but you can get a good price using limit orders and just being disciplined and having some patience.
And Morningstar shows your intraday indicative value. That's the equivalent of your NAV, right?
Yes.
Great. Well, that's wonderful. When I had my own ETF, I was so frustrated because my average spread, according to Morningstar, was 3.54%. And, we got up to 80 million and it was revenue weighted, so the large stocks dominated. But, ETFs have gotten a lot better. Spreads have tightened up immensely. Now, when I did ETFs, we couldn't we rebalance every quarter. So, and now a lot of ETFs rebalance daily. So, do you have a daily NAV on your ETF? Or
I get the report from the bank. They tell us what the NAV is each day. We rebalance it's because it's stock pickers. We have 25 stocks is what we hold, we don't make any changes throughout the year. And then at the end of the year, 5 new ones go in, 5 old ones go out.
Oh, excellent, excellent. Well, that's easy to price then. Okay,
Yeah.
okay, wonderful. Well, again, congratulations. That's
Thanks.
quite an achievement to get a couple hundred million, and also, of course, to be top rated by Morningstar.
Now let's switch over to some of the stocks that will be announcing earnings next week. Dad, what do you think about Dollar General?
Well, their sales are forecasted to rise 3.7%. Earnings are forecasted to decline 10.4%. But they've had recent positive analyst revisions, and the only issue with Dollar General, they truly have a horrible earnings surprise history. So I don't trust this stock, but they'll give us some guidance to the mood of the consumer. We have two types of consumers in America. We have the affluent ones, mostly boomers, and then we have the people that can't make ends meet. So Dollar General caters to more of the lower income people. So their guidance will be very interesting.
Yeah, I was going to say, it really it's sort of like an econ report on more downscale consumers. One of the things before I really got into investing, I didn't realize is that catering to lower end consumers can be very, very profitable. I always assumed that you buy Tiffany, that's where all the money is. No, that's not true at all. If you can if you can give services to people who aren't as fluent, you can run a very, very good business that way.
Now, what do you expect for CrowdStrike Holdings?
Well, this is, of course, the big company that tries to protect the cloud, and they had that glitch a while back where the airlines stopped working in Europe because there was a software upgrade, and it kind of crashed the Microsoft Azure cloud service, and they had a quick patch, and but they've never quite recovered from that. Their sales are forecasted to rise 20%, but earnings are forecasted to decline 29%. There's steady analyst estimates, and they have a good earnings surprise history, but they're still in the backwash of what happened to the European airlines. And Ed, I don't know if you remember when that happened, Microsoft didn't blame CrowdStrike. They blamed the EU for having open source software, and that was something, the former FTC chair, Lita Khan, was trying to do, force everybody to be open source.
Mm-hmm.
And that's one of the fights that we're having now. Kerr Steimer wants to Apple to open up its iCloud so they can go see if anybody's saying anything nasty
Right.
about the Labour Party. So it's interesting. When you operate around the world, you have to have different rules. But yeah. Anyway, Microsoft obviously defended CrowdStrike. But do you have any opinion of the stock?
I mean, it's basically, I agree with you. It seemed like it was kind of a market darling a few years ago, and maybe has lost some of its luster over the last few years. And I believe they hit their guidance. I could be wrong on this, but I thought it was a bit weak, where the market took it that way. But that's all I can say as far as I know about CrowdStrike.
And do you expect positivity for Broadcom Incorporation?
Absolutely. Their sales are forecasted to be up 19.9%. Earnings are forecasted to go up 43.1%. They have positive analyst revisions. They have a good earnings surprise history. This is a great, great bellwether, and it's a great way to end the earnings announcement season on that news.
Yeah, very, very strong stock. A little concerned about the price, but it's a market powerhouse.
And lastly, what do you expect for Lululemon?
Well, their sales are forecasted to rise 6.7%. Earnings are forecasted to only go up 2.1%, but they're steady analyst estimates, and they have a good earnings surprise history, but their guidance is going to be crucial. The interesting thing about Lulu, it's the sales of men's products. And apparently men don't buy their own stuff. Okay, they have to have women buy it for them. So their guidance will be crucial. And but they cater to very affluent consumers. So I'm kind of suspecting give good guidance.
I got to be honest, I've always been puzzled by the popularity of Lululemon, that some people just love the stock. I've never been really overwhelmed by it. The revenues have grown consistently. I don't think this year is supposed to be a very strong year for them. I think it's basically flat earnings, and I just don't see how you can justify a price level that high. Maybe if they dropped down about 20% or so over the next year, I could be interested right now. But as of now, I am just not terribly impressed by the company.
Ed, I would add that even though shopping's gone more online, in the Lulu stores, they would have like one yoga thing on the shelf to create the appearance of scarcity.
Mm-hmm.
There'd be like 200 of them in the back room. Do you know what I mean? So
Mm-hmm.
they knew how to retail. Okay, they knew how to create the the demand. So, have you been in a Lulu store, Crystal? Have you ever been in one?
Yeah, actually, that's so funny that you say that because I had that exact experience. They came out with like a new type of legging that's like very 2000s coded, where they had like the fold over top. And I saw it in the store and I was like, that's adorable. I would love a pair. I love all their stuff for working out. And they didn't have my size. And I was like, oh my gosh, like that sucks. I guess I'm going to order it online. And I went online and I saw that I could have picked it up in the store. So I went to the sales associate. I was like, oh, do you have an extra pair? She's like, oh, yeah, we keep a bunch of extra sizes in the back. Let me check. And so they had like a bunch of my size in the back and was like, so me and my friend got a pair. And it was just an interesting thing that you had to ask for it.
Yeah, yeah. They create the illusion of scarcity, keep the
Yeah.
premium price, and then you're just so happy you got one. It's,
No, yeah. I was like, well, now I have to get it because now you have my size.
yep,
Anyways.
that's right.
Good marketing. So let's pivot to some of the economic news next week. What do you expect for the ISM Manufacturing Report?
Well, there's some reports that the auto industry is starting to wane just a tad after building up inventory. So I'm a little worried about it, and of course, we hope Boeing starts building planes. We saw in the durable good orders it's an incredible drop on commercial airline orders, even though Trump got Boeing a bunch of orders on his Middle East trip. So this is going to be a little bit more of a wild card. But this is the part of our economy that's struggling. Obviously, there's going to be a lot of onshoring. I think the real other thing that's hanging over ISM manufacturing, we just got to get the housing market better.
Mm-hmm.
Housing sales have really slowed, and there's a lot of durable goods that go into homes. So that's just another reason the Fed needs to cut rates to fix this sector of the economy. So if we get a weak ISM report, it's just going to turn up the pressure on the Fed.
I'm a fan of the ISM report because it comes out the first business day of the month, covering the previous month, and it's a survey. So they just ask all the people at the company who's ever in charge of buying stuff. They say, "Are you buying more? Are you buying less? Or are you buying the same?" And they just take that all, and 50 is dead even. If it's higher than 50, it means manufacturing is growing. If it's below 50, it means it's not. And we've had a long, long run of being just below 50, not really bad, but just kind of sluggish. So I think that's going to continue. And really, I think, Louis, what you said, there was some buying to lock in prices before the tariffs. We'll probably see effect of that, but I think it's too early to see any effect of the price of tariffs impacting it. I think it's going to be more of the same, something like 48, 49 in that area.
And what do you think about the Fed's Beige Book survey?
I just want to look at the districts, see how many are strong, how many are weak.
Mm-hmm.
That's all I really care about. There's 12 districts, and if 3 to 4 are struggling, it just puts more pressure on the Fed. But I think things are doing better now. The springtime weather came, and things just really firmed up as the weather got better. But that's what I want to look at when I see that Fed survey.
What I like about it is it breaks it down by district, so you can see. We always say, "How's the economy doing?" But that's kind of a misleading. Sometimes, like the oil patch can be very weak, or you'll see areas of the other, more touristy areas of the country, they're not doing so well. So that's why I like the Beige book. Sort of, you can see at that more detailed level of how the economy is doing.
And what can people expect from the ADP and payroll reports?
Well, ADP, of course, is the private survey that comes out on Wednesday, and it was pretty pathetic in the previous month. And I like ADP because they actually do the payroll processing. And while the Labor Department report on Friday has all these seasonal adjustments, and of course they include government workers. So we want to, personally, I like to see a weak ADP report, put pressure on the Fed. And I'd like to see even a weaker payroll report on Friday because I want to put more pressure on the Fed, and we'll see if the Doge cuts ever showed up in the report. And the Fed has made it clear their mandate is now inflation, not unemployment. Powell made that comment, and I think he should stick to his mandate and take care of both.
Yeah. And in between those two reports, we'll get the initial jobless claims on Thursday. So you get that. If you're into jobs reports next week, boy howdy, that's for you. I think I think last time the non-farm payrolls was 177,000. I imagine we'll get something pretty much the same, plus or minus 20,000. And also the unemployment rate, I think, is 4.2%. Also, with that, I want to see how wages are, wage growth. It's been, wages have been growing, but kind of a little bit more than inflation. So what's actually going home in people's pockets hasn't been that great. It'll be interesting to see what kind of number we get from that.
That's a great observation, Ed. Jerome Powell, I think, gave the commencement speech at Princeton. He's an alumni there, and he was going off how he should have gotten an economic degree, but he got a degree in politics. And I guess the real criticism now is the Fed's starting to play politics, and instead of looking at the data, they're just dragging their feet and doing nothing. I can tell you that based on a lot of appointments that were made, there's some people in the Fed that aren't qualified. I was encouraged by Austin Goolsbee the other day. He hinted that a rate cut might be coming, and then Neil Kashari is a great spokesman. So those are the two guys I listen to. And then, of course, none of those guys are going to become Fed chairman. Trump's already got his new guy to, I think it's
Walsh.
Yeah, he's supposed to replace Powell when his term expires. So,
do you remember Bessent's idea that they would appoint him but not confirm him yet? And so Powell would serve out the rest of his term. So there would be sort of like a shadow Fed chairman. That was Bessent floated that idea. I don't think that went anywhere. But
this is why you're a DC insider. You just don't know it yet. Okay, I'm glad you planted that idea in Scott's head. Okay,
I got to make up. I was at Burning Tree, and Scott likes to play congressional. I'm more of a Burning Tree guy, but yeah, we were having scotch at the Occidental, and this is what we were talking about.
So, Ed, your dad worked for the NSA, and I expect that you have a different view of the world. Are there any global macro events that you foresee that could disrupt the stock market?
Yes, I do. That's all those things that we worry about, but that are on the back burner, and things can change very, very quickly. Obviously, there's geopolitical tensions in the Middle East, in Eastern Europe. We also have India, Pakistan, and that as Americans we sort of don't talk about that a lot. That is something. It is a cooled environment, but it can turn very hot very quickly. Both are nuclear powers, and it could alter the entire world commerce. And then in Japan and Taiwan, and then we have all the issues about supplying us with chips. That's always a big issue. So there's a lot of areas I am concerned about.
Wow. Okay. Well, I was feeling pretty good till you just said
that. But the Fed will come in, cut rates, and save everything.
Yeah, and speaking the whole world and the Fed. Ed, the whole world's in a demographic decline, except for the U.S. and India. I think we're still creating households,
Mm-hmm.
and I think Brazil's growing a little, but Brazil's supposed to shrink pretty soon. So it'll just be us in India with household formation, and then of course in America we do assimilate our immigrants, and I think Trump's still pro immigration. I just think he wants them to be to be legal, of course, and but uh, isn't this demographic decline going to, shrinking households in China and Japan and all over Europe? Isn't this going to cause uh, economies to eventually contract? Like even Canada's shrinking, and they have immigrants, but
Well, I would say the country to watch would be Japan, because
yeah,
if anybody can manage it and come out the other end of this, I don't think anybody's done anything quite like this in the modern world. So I would keep eye on Japan. Also, the key crystals, though, for years ahead, the key letters are TRF, TFR, total fertility rate. That is the stat to watch. How many babies are being born, because that's going to drive so much of the economy. But I think, Louis, the real key aspect is when you look at the social welfare state. So if you have, it's basically a manifestation of the age pyramid. So if you want to have a social welfare state and you have a lot of young people relative to the number of old people, it's a great idea. You can have a wonderful, wonderful social welfare state. The problem is when that age pyramid turns upside down, then suddenly you have a big problem with your welfare state. It's a lot harder to run. How to manage that? Tell people that they're going to get less from what they paid in. I don't think that's going to go over too well. But this is the price of, not having children, and its effect not only the entire Western world. I think in Europe the total fertility rate is something like 1.2 or 1.3. It's extremely low. You're getting many more grandparents than there are grandchildren. I think this is going to be a major issue that's going to drive the world economy for the next 20 years or more.
yeah, and Japan apparently has the highest birth rate in Asia, and you would think it would be Indonesia or Malaysia or someplace like that, but it's not. So it's and I think they did fight their demographic decline with some productivity enhancements, but we'll see if we can create more.
Yeah, I mean, we fight it by having immigration. A lot of
Yeah,
those countries really do not. China does not. The saying is that China will become old before it becomes wealthy.
So, shouldn't the US be an economic oasis since we have better demographics and assimilate immigrants?
yeah, that's the whole key. And if you need any proof, just go to the South. It's booming. Go to the Mountain West, especially Utah. It's booming. In fact, I think Utah has the highest rate of household formation, so it's been the fastest growing state for a long time. And immigrants come here to work, and the only change is Trump just wants them to have a green card and be in the system.
Also, look at the U.S. stock market versus the rest of the world. I think it was something like 14 years of outperformance. It's only changed a little bit recently.
That's right, and the earnings are still good. I mean, Nvidia was the grand finale, and although Broadcom, I guess, will be the last exclamation, and we're still double digit earnings growth when you cap weight everything.
I have one of my stocks will be reporting on Monday, SAIC, which is the defense company. So they've been looking very good lately. So I'm optimistic for what they'll have to say.
Yep, yep. Yeah, well, I think haven't our munitions been depleted because we gave them all to Ukraine, so
Yeah.
we have to reload here. Yeah, it's defense is still an interesting business. We have ESLT we added, Ed. That's the Israeli defense contractor.
Mhm.
They're pretty busy over there too, as you might know.
Ed, do you have any opinions on gold and crypto?
I mean, I'm pro crypto, and I like to see it. I'm glad to see the administration has become more pro crypto. I can't really call myself an evangelist on the issue. I always have my feeling is let a thousand flowers bloom. So I think it's and I no way could I say I predicted the dramatic rise in Bitcoin. I always thought, well, it's been knocked out and it's always come back. But I'm a fan of crypto. As far as gold, I've written a lot about gold. I think that's just closely tied to real interest rates. So interest rates after inflation, I think, is sort of the big driver in gold. But gold has also done well. I think it's beaten the S&P 500 since over the last several years. So I like to see gold do as well as right now. A lot of people get very passionate about the gold and crypto, and I really don't. I try to be more rational about the issue.
Well, Ed, if you go to Costco, I suspect you don't go to Costco much, but
The gold bars.
yeah,
Yeah,
they,
I've seen those.
yeah. So
Do you know what it's 1 ounce you're getting, right?
I don't know. I haven't bought gold at Costco, but yeah, I think so because it's $3,000. Yeah, yeah.
Mm-hmm.
They're charging a lot for it, and they're not selling crypto yet, but maybe that's next. So we'll see. So one final thing, Ed, do you think the dollar's going to get its mojo back? It kind of got off to a rough start this year with the bond vigilantes tormenting Scott Bessent and all, but it seems to be trying to firm up here, especially as ECB gets
Yeah, I mean, I definitely think so. I would say I like the phrase "getting its mojo back." I mean, the dollar is a very good place to be, and particularly what the future will happen in Europe, really across the country. I mean, across the continent. I mean, you're seeing brownouts and things like that in Portugal. So the dollar is always a good place to be.
Yeah. That whole blackout was they didn't have enough turbines. They needed some baseline turbines. At least this was the Spanish blackout. They have obviously a lot of green energy, and they're very proud of that. But you just need a turbine spinning somewhere from hydro or gas or something. And if they just had 20% turbines, they wouldn't have had that blackout.
Well, thank you so much, Ed, for being here and answering all of our questions. Where can our viewers find you?
Well, I have a Substack, so you can go to cws.substack.com. You can find me there. Also, you can find out at AdvisorShares website, you can find out all information about the ETF. It's the AdvisorShares Focus Equity ETF, and the ticker symbol is CWS. And then the blog, which is Crossing Wall Street. So a lot of places to find me.
Well, thank you so much, and thank you to you all again for watching and supporting us. If you want to check out any of the links that we've mentioned or Ed mentioned, they will be in the description below. But until then, we will see you all next week for a new video. Thanks so much, everyone.